Let me ask you a question, and it's a serious one.
What's going on, finance lovers? It's your guy Josh from JoshLM Finance, and welcome back. Okay, so today we got to talk about something that's, kind of bubbling under the surface and making a lot of folks nervous. See, according to reports from places like the Daily Post, and this is being echoed by industry watchers like Fitch Ratings, there are about 14 Nigerian banks that are currently falling behind on the central bank's tough new capital requirements. And that deadline, March 31st, 2026, is coming up way faster than you think.
All right, so let's get right into it. First things first, we're going to break down exactly what this whole recapitalization thing even means. And, more importantly, why you absolutely need to care about it, because it directly affects the cash you have sitting in your bank account right this very second.
Okay, so let's really break this down. In the simplest terms, bank recapitalization is just the central bank turning to all the banks and saying, look, you guys need to have more of your own money in the bank. Think of it like a mandatory emergency fund for the bank itself. It's a giant financial cushion, right? And that cushion is there to make sure that when the economy gets rocky, and with crazy inflation and the Naira doing what it does, it gets rocky, the bank can take a hit without your deposits being at risk. It's really all about making the whole system a lot more bulletproof.
And take a look at these numbers. These new requirements they're no joke, seriously. For the big international banks, they now need to have 500 times billion Naira. To put that into perspective for you, that is a gigantic leap from where they were before. We're not talking about a small little hop. This is like a pole vault. It's a massive jump that's basically forcing every bank out there to prove they have the financial muscle to even be in business.
So the CBN dropped this news back in March 2024, right? They gave all the banks a 2-year window to, get their act together. But here's the thing. That clock has been ticking, and ticking loudly. We are getting seriously close to that final deadline. And from everything we're hearing, that March 31st, 2026 date is not moving. The race is absolutely on.
Okay, now we're getting to the part I know you've been waiting for, the real meat of this explainer. Let's talk about the banks that are allegedly still scrambling to meet this deadline. This is the list you need to see. 14. Just let that number sit there for a second. According to multiple reports, 14 banks have not yet met this new requirement. That's 14 institutions holding who knows how much of people's hard-earned money that are still under immense pressure to find a whole lot of capital, and fast.
All right, so let's get into the names being mentioned in these reports. And I gotta stress, this is all based on industry reports, and the situation could change, right? It's fluid. But the list allegedly includes names like FCMB, Unity Bank, Keystone Bank, Union Bank, Taj Bank, Standard Chartered, Parallax Bank, SunTrust, and a few merchant banks as well. Now seriously, I need you to just pause for a second. If your salary gets paid into any of these banks, or if you've got your savings or your business funds parked there, this is not the time to zone out. You need to be paying very, very close attention. This isn't about spreading panic, it's about being smart and informed.
So what actually happens if a bank doesn't make it? What's the worst-case scenario? We have to talk about this, about the real-world consequences if a bank can't cross that finish line. And for anyone who was around for the 2005 recapitalization, well, you already know things can get very messy very fast.
Look, if a bank fails to meet that deadline, the CBN can and likely will revoke its license. And the very first thing that happens? Bam! Your accounts are frozen. Instantly. No more transactions, no more withdrawals, nothing. Your money is just stuck. And from that point on, it's just a big question mark while the regulators decide what to do next. Maybe a stronger bank comes in and buys them out in a forced merger. Or maybe they go into full liquidation, where they sell off everything the bank owns to try and pay people back. Either way, for you, the customer, it just means a whole lot of stress and uncertainty.
And this really paints the picture of what it feels like on the ground. We're talking about your local branch, the one you go to, just gone, overnight. Imagine trying to call customer service. Total chaos. A simple transfer you were trying to make? Delayed. Who knows for how long? The main point here, the thing you have to remember, is that this isn't some high-level financial news story. This is about whether or not you can get to your money when you need it.
All right. I know that's a lot of heavy stuff. So let's shift gears a little bit. Let's move from the what-ifs to some good news, because there is good news. A lot of banks have already stepped up and are reportedly in the clear. So let's take a look at the safe list, if you will.
So who's sitting comfortably? Well, you've got the big players, the heavyweights like Access Bank, Zenith, and GT Bank. Reports say they've already met and in some cases even blown past the new requirements.
We're also seeing solid positions from banks like UBA, First Bank, Fidelity, and others. I mean, Access Bank, for example, apparently crossed that 500 billion naira line super early. That shows they're on top of their game. So yeah, if your money's with one of these banks, you can probably take a deep breath and relax a little bit.
Now, I know what some of you are probably thinking, but Josh, what about the NDIC, the insurance? And you're right. The Nigeria Deposit Insurance Corporation does insure your deposits up to 5 million naira. But let's be honest with ourselves. Who here really wants to go through the stress and the paperwork of chasing an insurance claim? It's a good safety net to have, for sure, but it's the kind of safety net you pray you never actually have to test. Being proactive is always better than trying to recover after the fact.
Okay, so that brings us to the most important part of this whole conversation, your personal action plan. What can you do starting today to protect your money? And let me be clear, this is not about panicking. This is about being smart, being strategic, and staying in control.
Let's walk through these steps. First, and this is Finance 101, but it's never been more important, diversify. Seriously, don't keep all your eggs in one basket. If your bank is on that at-risk list, it might be a good idea to move some of your funds over to one of the banks on the safe list. Second, you've got to become a news hawk. Keep your eyes peeled for official announcements from the CBN and from your bank. Third, try not to keep huge amounts of lazy money just sitting in an account you're worried about. And finally, just stay informed, which by watching this, you're already doing. And hey, if you're getting value out of this, do me a quick favor and smash that like button. It really helps the channel. And drop me a comment below. Is your bank on the safe list or the at-risk one? I'm curious to know.
So let's wrap this up with one final thought, and it's one that really ties everything together. History has shown us, again and again, that when a bank starts to wobble, it's the customers, it's you who feels it first. And it's bigger than just our own accounts, right? A shaky banking sector can send ripples through the whole economy, hitting investor confidence and slowing down business. So look, paying attention to this stuff, staying informed, that's not being paranoid, it's just smart financial self-defense.
Thank you for watching till the end. If this video helped you, you know what to do. See you in the next one. Take care.